BlackRock, which is going to get approved. It's just going to get approved. And it's going to be the only one that gets approved. And maybe after they collect 20, 30 billion, then others will get approved, but they're going to get approved first. Guess who they're working with? Coinbase. And that to me says so much that, one, this is coming, right? There's 755 for 756. I'm staking the stake in the ground. This is not going to be the second denial for them. Too much for them to lose to even throw their hat in the ring. They could have just said, y'all have fun. It's an index on money laundering. That's what Larry said, 5 years ago, 6 years ago. So could have just stuck with that.
Asset manager Grayscale Investments recently secured a significant victory in its ongoing battle against the United States Securities and Exchange Commission. Grayscale has been pushing to convert its Grayscale Bitcoin Trust into a Bitcoin exchange-traded fund. A South Appeals Court judge has sided with Grayscale, agreeing that the SEC's rejection of their ETF application was unfair, citing concerns about security practices and fraud protection. This favorable ruling by Judge Naomi Ryo allows Grayscale to proceed with a second review, but it doesn't guarantee automatic approval for their Bitcoin ETF. The SEC has decided to extend its review period by an additional 45 days for 6 applications seeking spot Bitcoin ETFs in the United States, pushing the final decision back to October. Simultaneously, BlackRock, the world's largest asset manager, also finds itself in a similar situation with a delayed SEC decision. Mark Yusko provides valuable insights into the regulatory landscape surrounding ETFs and the broader cryptocurrency space. He also delves into the price impact of the court ruling and related news on GBTC.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
You want to regulate by enforcement? Okay. Not really a good way to run an agency. But we've had other agencies do it. We've had the FDA do it for a while. We've had the a couple other I'm blanking on, but we've seen it, right? We've seen very political people do very political things. The problem is if you're regulating a law or a rule and someone doesn't comply with it, you're on pretty solid ground, right?
Yeah.
If you regulate air, we were going to pass this rule, so you should have known we were going to pass this rule, and therefore you violated it. That's kind of what they did with BlockFi and Voyager and those guys. Are like, well, you violated this law, but you didn't say it was a law. You actually said the opposite. You said they weren't securities. Well, but you should have known we were going to change our mind. Oh my God, really? Okay, so that seems destined for failure, which we've seen number of failures. But what the SEC did here, which is just, and they're just getting smacked every which way from Sunday. If you basically take a bad position against an established law, a judge, unless you can handpick the judge, and like we see in billions, if you can pay them off and do it, unless you can do that, you're in trouble because a good, honest, independent judge is going to do their job. And they're going to say, no. And we saw that in the Ripple case. We saw it in this case. We saw it in the Uniswap case. So thankfully, we got some good, honest judges, which they do still exist. But I still believe, right, that the bigger powers that are controlling this particular person who's on this enforcement kick, I still think he's kind of the pawn, the tool, right? He was installed into this position and he's like, okay, now I got to go do these things that they're telling me to do, which is okay. And there's probably some of his own personal stuff in there too. But ultimately, I don't think those powers that be are done fighting. And I think your insight on custody is really, really important because in the early days, Jay Clayton would get up there on the stage, and he and I actually did a panel on this together, and he would say, it's about market manipulation. We can't approve this because these markets are manipulated. And I was like, wow, you mean more manipulated than the penny stocks and the low float stocks? Like, I don't know if you've been following this VinFast EV company. Oh my God, this is crazy.
In a surprising turn of events, Bitwise has decided to withdraw its application for the Bitcoin and Ethereum market cap weight strategy ETF following the US SEC's announcement of delays. This application had originally been submitted to the SEC on March 3rd. It appears that Bitwise is taking a step back to reevaluate its approach, despite the brief surge in positive market sentiment that followed Grayscale's recent SEC victory. Mark Yusko now delves into discussions about the price impact of GBTC and shares his insights on where it may be headed next. Join us as we explore his analysis, as it seems like we've entered into a new chapter of this unfolding narrative.
We've seen this movie before. We know exactly how it goes. GBTC, right? Big winners this week. The last run, when we went from 10,000 to 60,000 the first time, was all GBTC, right? GBTC got to $20 billion. And the reason the price went up so much is what people forget, the vast majority of Bitcoin is either not movable, right? It's in a multi-sig and there's some problem or whatever, lost or stolen, hodler, I'm not selling for anything, right? And so it's round numbers. Like this is one of those 85% of all statistics are made up on the spot. I'm going to argue 80-ish% is that. And so 20% is kind of the free float. So back in the last cycle, the market cap was a couple $100 billion. So if a couple $100 billion, 10, 20% of that is $40 billion. If you get $10 billion of flow on a $40 billion free float, price is going to go ballistic. And it did. And remember, it was fast. We went from 10 to 60 fast. And, then Elon came out with his tweet and it went down and then it recovered back up to 69 or whatever. And that was the end on the day of the futures. So this time, and I give all credit to Eric, who we were going to have join us today, but Eric Balkunis is a great analyst and he did the math, right? He tracks the money that's in the kind of RIA and the people who use mutual funds and ETFs. And there's about $30 trillion. Okay. It's a lot of money. So when the ETF is approved, money's coming in, right? Right now, UBS can't do it. Merrill Lynch can't do it. All of these big RIAs can't do it. As soon as that ETF's approved, bang, they'll all have to ascend. So let's say 0.1%. Okay. 0.1%, $30 billion. 30 billion. So today, market cap's around $500 billion. 20% of that's 100 billion. 30 on 100, that's a similar amount. 10 versus 40. I think we go pretty parabolic. Now, we don't have as much leverage this time, so it probably doesn't do a 5x, but a 3x, not even a hard move. But that's 0.1%. If 1%, right? My hashtag get off zero, if you go from 0 to 1%, which is not a lot. And had you done that 5 years ago, your portfolio would have compounded at 200 basis points better. So people are going to see that math, and Barry and others are going to put that out there. 1%, that's 300 billion. 300 billion on 100 billion of free float. Katie bar the door, baby. Katie bar the door.
In a significant development on Capitol Hill, Congressman Warren Davidson of Ohio has once again called for the removal of SEC Chair Gary Gensler. This comes after a court ruling favored Grayscale, reinforcing the argument that Gensler's SEC actions lack consistency. Grayscale's recent legal win marked Gensler's second setback in 2 months. Additionally, Republican presidential candidate Vivek Ramaswamy endorsed the court's decision as a pivotal moment for the U.S., criticizing government regulatory overreach and foreseeing potential progress in the crypto space. In regulatory news, the SEC initiated legal proceedings against Impact Theory, a Los Angeles-based media firm, over an unregistered NFT offering. These actions signaled the SEC's entry into NFT regulation. Meanwhile, the SEC introduced new regulations affecting private funds, a move not expected to disrupt crypto companies. Ripple also challenged the SEC's assertion that XRP is merely computer code, emphasizing its unique position in the crypto landscape. Amidst growing cryptocurrency, NFT, and Web3 adoption, the call for transparent regulation continues to be a prominent theme. Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.